Right.
Great. Then you can unmute everyone. Okay. Any questions? I hope it wasn't, it sounds complicated, but it's really not once you understood, the spreads and straddles. I think next week I really like to continue with like iron butterflies. I was telling Sean with iron butterflies with 1980s. October 19th was the anniversary of the crash of that 508 points loss, which that was one of the worst days. Dow Jones dropped like over 22.3%, and that's I know people who were option traders and they really survived because of playing iron butterflies, for instance, and butterflies. So these are really good strategies, especially the name of the game. Please know is conserving your capital. If you're trading, that's your rule number one. So you want to do that first, and then you can build on it. So these strategies allow you to use portion of your capital to make money, to grow your capital, but also take a lot less risk than just doing other strategies which are more directionally biased. So, okay, I'm open for any questions.
Yeah,
Any,
Ramin, I have some
yes, sir.
questions. So, trying to understand like sort of the economics of a transaction,
Yes.
and like from a return perspective. So I don't know if that's a way to look at it. I know if you look at, I just ran some quick numbers on like say 80%, you're in the money and 20% you lose money. It had like a positive expected value. In your example, it was just 28. Um, but from a return perspective, would you look at it by looking at the maximum gain divided by the money that you're risking, or the margin that you're putting up, and would that be the positive return that you're looking at per trade?
Yeah, so it's the consistency of the return. So it is not. First of all, you will see that majority of time is like 1 to 3, and that's why you can play with it. So sometimes like $1 profit for $4 loss. I mean that's not a good odds when you think about from the pure profitability, but the probability is what allows you to accumulate over the time
Right.
to have. So it's usually what happens is about 80% of success. That 20%, if I lose almost everything. So that 80% consistencies, which is adding to your investments. And I mentioned by the time like it's like there's only 3 weeks left or so, usually I would close it. Just that's why I even talked about diversification. So this is really good because the odds are in your really favor. I mentioned I just used spiders, but I like S&P, 3,100 and 3,600. If you have these criteria, you have it in your mind, you think for the next 3 months, you don't see things really going beyond that. This is the strategy you want to play. If it's in a shorter time, you feel that the catalyst is not there to have this gyrations. If there is, then this is a good time to buy actually strangle and play that. This is just added bonus in the sense that you can also take advantage of um, a choppy market, but not a wide moving market. You can use it. This just next week. If you talk about Byron butterfly, for instance, I will give you example like about pinning. We can use that on a weekly. I've talked about pinning in the past or the maximum pain. These are the strategies which work fantastic in those times for short term, and I will teach you on that. But this iron condor it's all about the probability of the number of times you gain, not the amount of money you gain.
Right, right. And the second question was, if you go back to that one slide, you mentioned something about 1 to 4 times. It was the slide that you were showing the iron condor, the example, and it had something like 0.25, and you said something about 1 to 4.
This, right? No?
Where was it? No.
Was it the Think or Swim, I think?
Yeah. No. It was towards
No.
the latter part. Yeah.
This is the, basically this
Yeah.
is,
Yeah. Exactly that
Yeah.
part. Yeah.
Think or Swim.
Where it says PL margin. You mentioned something there. I was.
yeah, so it's the 25%. I want to have a 25% chance of success, basically.
Oh, so okay. Okay.
So I don't want to go like 50%. So the higher it is, the more risk you're taking and the lower probability. So I want to make sure I make enough money for every dollar. For $4 of risk, or for $1, I can accept the $3 or $4 of risk. But I don't want to put like 50% because I want to make sure that I have a high chance of making money.
Yes.
But that means the probability is low. So
So
that's
in the previous example, it was 20%. So you're suggesting to do 25%?
no, that's a little different. So the 20% was so there's two different, being in the money, the probability, and this is the profitability of the, so that's the difference. It's one was the probability of being in the money, and this is again, this is like you can choose, pick and choose any other. So the, I don't know if any of, I don't know where you saw that the 20% is more of the probability of expiring in the money because I
Oh,
want to
okay.
hold on. But the profitability is what I'm looking at, that I don't want to, like for instance, this Micron is almost like 1 to 2. So I know the most I'm going to lose is hundreds. And why is that? Is if I add 82 plus, in this case, is like 168, that comes to be 250. Well, the spread is $2.50. It makes sense. So this is a good premium I'm collecting. That's pretty nice. So the odds are, this is really good. If it, on the other hand, it could have been, most of the time you will see this is like 50 cents and this is like 150, which is 1 to 3. It could be 50 and $2. It would have been, that's what I meant. 50 and $2, that's 25%. So it's still acceptable. So
Thank you. Yeah, understood. Thank you.
You're welcome.
Yamin, Ida, how are you, everyone? I have a question on the Iron Condor. I just heard you say when you want to adjust the whole chain, basically. And why is that?
Good question. So that's, again, this is like all or none because we are using probabilities. So this is not one of the times I had mentioned before. Sometimes I like to, that in and out, if it's strangle, we can get out of one leg and let the other one run. This one is because it's all about the probability game, and they are all connected to each other. So you kind of defied, and the whole idea of why you're in it. The thing was, because of the market's unpredictability, and I mentioned about gamma. So these are the very high probability, low profit kind of thing. So you're not being biased. You're not in this situation. The reason I'm in Iron Condor because I don't have any bias of the directions. All I know is I wanted to stay within, but as soon as I get out, maybe you might have a big gyration and just move out of the boundaries on the other side. At least if I have this side, let's say I have the foot legs, I'm protected. If I go, at least I can keep that. But once I'm out of this, I'm really exposing myself. So that's the reason. Otherwise, you could, and you become like purely vertical spreads at that time. If you get out of one leg maybe and stay with the other one, it's up to you. But then it kind of defeats the whole idea why you got into this as a kind of a risk control in a sense, rather than being a bias. Because when you're in a risk, when you're in verticals, you actually have a bias. With verticals, you have it'll have a little more bullish to, you know, slightly bullish or bearish or slightly bearish. By the way, you can do all this by, you know, we talked about as far as the put side, the same thing. So basically, you want to be either all in or all out. So that's the reason, just the way the strategy is. The same thing with iron butterfly, and we do. Because otherwise, why you want to have 4 legs, you can just play vertical spread and be in control of that, which is more profitable actually.
Okay, to add to that question, is there a situation where adjusting one of the spreads of the iron condor can increase your probability of profit?
Yeah, you can actually, there is, that's what I said. The beauty of this is, again, you can play with it. You can just keep, so your idea would be, do I want to have more probability or do I want to have a little more premium collected? And it tells you, it's actually, you can play, like Thinkorswim has really good one. And you can, again, this is a good thing you can even do maybe with paper money in the beginning if you like. But the risks are so small that it allows you to do, and I mentioned last time, it allows you to do multiple contracts. Initially I had the 10 contracts here. Then I thought, well, with one, it's a lot easier to see because, you know, you're risking $82. I mean, that the odds are being $820 and risking 1680, even though it looks bad as far as loss. But if your chances are 80% of that, so 80% of winning 820 and 20% of losing 168 or 1680, that's a pretty good odds. But you can adjust it. You can't do this either because of time. Sometime maybe you can do a live trade and that will show you, but this is, you can play with it. And I just want to make sure you're a little more comfortable doing this because it is a pretty good strategy. So
Thank you. It looks like it. It's just a little harder to grasp it because I have not done it. I think I've done it one time and I just followed somebody.
oh, right. No, I mean, you will see more and more, especially again with indexes. And I'll probably once in a while, now that hopefully get a little more comfortable. Once we do one iron butterfly, it will make a little more sense. But as long as you understand straddles, strangles, and the spreads, this is just a combination of all that. So
Yeah. All right. Thank you.
Just lower risk. You're welcome.
Lower risk. Okay.
Anyway, okay, good. All right. If no other questions, would you agree? Is iron butterfly would be a good one for you next week if you like, because that one you can actually use on weeklies too. I mean, it is really like for pinning and it's pretty attractive. And I would encourage understand iron butterflies. So
thank you. Okay. I'm excited to learn all these things I hear. Iron condor, iron butterfly.
Oh, good. Yeah, no, it takes time, but again, we're building on it. But at the end of the day, everything, you will see how everything is just built on like 3 or 4 strategies.
I've never traded options, so many options until this COVID.
Oh, and no, there's about 26 different ways, but they're all built on 3 or 4. So don't let them to.
It goes crazy in your head, you know. There's so many terminologies.
Yeah, but that's what I thought. Again, like with iron, a lot of people you talk. Well, iron, if you know it, both call and put, then it's easy to understand. If I'm going to use a strategy, I make sure I have put and call. If it's just a butterfly or if it's just a condor, then you know you're going to build it only on calls, only on puts. It's only one thing. Then you understand it a little easier. So anyway, All right. I really appreciate again having all of you. Thank you for spending your Wednesday with us, and I'll look forward to seeing you on Saturday. It's been exciting weeks, and
Oh boy.
election will be in actually in 2 weeks. Class will hopefully know what happened the night before.
Oh boy. Yeah. Craziest time.
It is. It's a crazy time, but all is gonna work out. So, anyway, I wish you all a good night. And Sean, thank you so much. I think we can stop, and I'll see everyone on Saturday at 2 o'clock.
Okay. Thank you so much.
Thank you.
Have a good evening, everyone.
Goodbye. Bye.
Bye.
Bye, Rami.
Bye. Bye.
Bye.